Lead a life of entrepreneurial freedom with insights from successful creatives, entrepreneurs, and investors. Discover how they overcame challenges and turned their biggest dreams into reality. They share their personal success playbook so you can build the business and life you truly want. Welcome to Passion Millionaire, the podcast by Robert Roth. Rock and roll your dreams.
Welcome to today's episode of the Passion Millionaire Podcast. And today we have a very specific angle of business, which I'm personally really excited about, because that is an angle where a lot of value is being created for business owners and the ones who are future business owners, talking about businesses with systems that can run without the owner as well. We have a guest here who is in finance for over 25 years. He's in financial planning for business owners, specifically also does wealth management, exit strategy planning, and he's all about the Freedom Day. And one big reason why he's on the podcast is also he has built and exited businesses himself, which is really exciting. He can speak out of experience as all of the other podcast guests we have. So therefore, I'm happy to introduce Jeff Kikel. Welcome.
Robert, thank you very much for inviting me on the show. I'm excited to have the conversation today.
100%. Let us know who you are. Give us a little bit of a backstory, and then let's hop on this train of exit strategy for businesses. And be really excited to hear your stories about that as well.
Thank you. Well, give you the quick nutshell. I started out my career actually in advertising and marketing, and I got married and I was traveling all the time, and everybody I worked with was divorced, and I really liked my wife. So I decided that it was time to find some other business, and I got into finance. Really had no background in finance. I was, like I said, an advertising and marketing guy. Went to work for a very large firm here in the United States that really taught me everything I needed to know. You know, it was a 17-year career of learning. After 17 years, I'd kind of hit the wall, so to speak, of what I could do at that company, and I decided to leave, go to work for somebody else, which was a public company. Realized why I'd never worked for a public company and never wanted to, because they think so short term. And after a few years of that, I decided to go out on my own as an individual wealth manager. It was kind of that time in my life too, where it was early enough, but not. I had, like I said, spent a good 22 years at that point working for other people, and it was either take the time now and go off and launch something on my own, or I was just going to end up working for somebody else for a long time. And I really reached a point where I said, okay, if I'm going to do it, I've got to do it now. And so I launched off, started my own practice. It was kind of what I would consider a hybrid of where I worked for a company, but I was independent within that company. And things worked out well. I got recruited to another company, and that was kind of the point in my life where it was the last people I ever worked for in my life. I really didn't enjoy it, and I came to the realization that I wanted to launch my own business, that I could create it on my own, and I could get to the point where hopefully at some point in the future, that business generated a sale, an exit for me. So I did that with a partner. We launched off, started a wealth management practice, relatively small at the beginning, and over a 6-year period of time, grew it to just slightly above $250 million under management. In the process of that, just to add complexity to it, the real reason I kind of jumped out on my own was I also started a co-working space. Shared workspace, completely different from anything else I had ever done. But I saw a need, and I really kind of realized that I'd always been an entrepreneur. I was just an entrepreneur inside other people's companies. So I was an entrepreneur. Yeah. And, I always was that guy who was like, okay, here's the project. They throw me into the middle of it. with very little direction and very little money and just go figure it out. And that's what I was good at. Well, that's what an entrepreneur does in most cases.
Exactly. Yep.
So I launched off, had, two different businesses that I was starting up basically at the same time. I would not recommend this to anybody, but it was kind of a weird situation because in our industry, I would have had to have approval from my previous bosses to go launch the co-working space, and they were never going to give me approval. So I kind of had to jump in there and say, okay, I'm doing both of these at the same time.
Yep.
Over that next 6 years, I continued to build both businesses. I also found some other needs kind of out there and launched a couple of other businesses on top of that. One of the things I do best is figure out ways to make a business highly efficient to where it does not require me to be involved in it. So I was able to build a lot of businesses that way up to the point where I was kind of stressing myself out. And fortunately, the COVID pandemic came along and it forced me to slow down a little bit.
Okay.
And look at life like, okay, I can't, like in the case of the co-working space, well, nobody was coming in, but we had a few people that were working at home that started coming into our offices. But my wife and I had to get up and go to work every day. We had no employees at that point, but we had to get up and go to work because we did mail for people. So we were required to be here. The wealth management practice, I mean, we continued to run that mostly over Zoom and everything else, which kind of changed our business as a result. What came out of that whole thing was I made each business more and more and more efficient. And when you don't have that ability to have to get in a car and drive to a client's office or drive to their house or whatever, and you're forced to say, hey, we're doing it through Zoom. That's the only option we have. It was amazing how the world changed. And what had been a couple struggling businesses turned into really effective, highly profitable businesses at that point. And it just kept growing, growing, growing. 2022, I had started prior to that talking about what I call Freedom Day. And Freedom Day is basically the first day you wake up and you didn't have to get up and go to work that day. You have a work optional lifestyle. So I've been talking. Yeah, go ahead.
Yeah, let's dig into that again later because that's a very exciting concept, and that's something a lot of people are trying to make happen in their life, and maybe they don't have the right idea or structure of how to go about it.
Yeah.
So therefore, let's hop onto that definitely again.
Okay.
Take a note of that. So I would be excited to. You have opened a lot of conversation strings that we I think should deep dive a little bit, especially you've mentioned several companies that you have started and built. So your wealth management company, then the how was it called? The office, right?
The co-working space.
Co-working space. Yeah. Didn't get the word right now.
Yeah.
So, and was there another business as well? It sounded like there was, additional business. So what was the other business? And then,
digital marketing, opened a digital marketing agency, which kind of supported the other businesses. I tend to open businesses that support my other businesses along the path because I'd rather pay myself than pay somebody else to do it. So we have a tax practice as well. We do taxes for individuals as well as businesses. And then we have an insurance agency focusing really on it works kind of part of the wealth management practice where we, use insurance strategies and things like that with clients. So
you have 4 businesses currently, is that right?
4 businesses. At the high point, we had 7. And we've slowly kind of pecked away and either merged or just either closed them down or sold them. So my first exit which I call my first Freedom Day, was 2022 when my business partner in the wealth management practice decided that he wanted to buy me out of the practice. We were kind of going 2 different paths. And I've always said I'm going to write a book at some point that is how to piss your partner off enough to get them to buy you out, because that was really kind of what happened. in the process. We were going down two paths, and it was not going to work anymore. And partnerships never work for me. It's never worked right. They've always kind of turned out bad in the end. So, I always get myself into them, and then it's just ugly getting out of them. But, as a result of that, that gave me my freedom day. I basically woke up that next day and said, well, what do I want to do for the rest of my life? Because I was 55 at the time. And that for me, it was, well, what is it that makes me excited? What makes me want to get up every day? Well, I still love the wealth management world. Yeah.
Yeah, 100%. Let me dig into that a little
Yeah.
bit more. So, first of all, congratulations.
Thank you.
What an achievement.
Mhm.
Absolutely fantastic. Like, love it. So could you give us an idea also which business was that you sold? Like, what was the size of the business?
Yeah.
And, you choose which numbers or how you present the numbers, right? But
Mhm.
some context is always helpful, right? And how big was the exit, or what did you learn from the exit? So
Yeah.
those type of questions, give us a little bit more of an idea.
Yeah. So, I mean, the first exit was the wealth management practice that I had built. That was the largest business at the time. It was the one that paid me the most, so to speak. And, ended up, my partner bought me out of the business, combination of cash plus I financed, over a period of time that exit for myself. So, it gave me an income coming in as well as a chunk of change. It was a 7-figure exit in the end. After everything is all said and done, it'll be a 7-figure exit from the
Nice.
business.
Yeah.
I was comfortable. I would typically tell people, don't finance if you can avoid it. I
Yeah.
knew the
So you're
business.
talking
Yeah.
about owner financing.
Yep.
Did I get that correctly? So
Yep.
basically, he paid you a percentage, and then he said to you, "Hey, I don't have the rest of the money. I don't
Yep.
want to take out a loan. There is no way I can leverage any resources within the company to take out a loan. I don't want to do that. Hey, let's figure out how I can just pay you out over time." And then you probably did an agreement about he additionally needs to pay you an interest for that, or how did you structure that? Like, am I
Yeah.
somewhere along the right
It
lines?
was structured as a loan, basically. So, it's owner finance loan. It was over a period of time plus interest on top of that. And it worked out really well in our case. And this is something that I try and encourage people. Accountants are good at certain things, but they're really terrible at other things. And they're really they focus on trying to eliminate taxes today. And in a lot of cases, they put their clients in a really, really bad position if they're going to sell their business down the road. So I'll give you an example of how this worked in
Yeah.
my favor. Yeah.
Yep.
So when we founded the business originally, now our CPA told us, well, you need to be an S corp and all that. We were an LLC, and
Partnership.
well, you need to be an S corp and all this because of the tax treatment and all that. Well, I kind of knew a little bit about exit. Well, I'd done a lot of exit strategy planning, and I knew kind of how it would end if it ended. Would likely be a stock sale and not an asset sale. So we actually, when we formed the business, like 6 years prior, we formed it as a C corp. And
Only that's C corp.
what
Nice.
happened was that C corp allowed us to then treat the business as what's called a qualified small business corporation. And the benefit of that is when you sell a qualified small business corporation as a stock sale, then there is no capital gain on it. So,
Definitely.
that's a huge tax benefit to doing that. And you got to do some long-term planning on this because you have to do this for at least 5 years. So this is why I always tell people when they're starting to think about it, their exit, you got to think about this. You got to have somebody that knows what they're talking about. And two, you've got to plan ahead for a lot of this stuff because if you don't, I mean, most people kind of wait and then just all of a sudden, oh, I want to sell my business next year. And they put themselves in a position where, okay, you have no choices. You have no ways of doing things. There are still some strategies to reduce, your tax costs, but you can put yourself in a situation where, okay, this is not so good. So worrying about what taxes look like today versus what they could look like in the future, I'd rather pay tax. I always said this, I'd rather pay, if you think of a farming analogy, I'd rather pay tax on the seed than the crop at that
Okay.
point, so we paid tax on the seed, but I didn't have to pay tax on the crop in the long run.
hmm Okay, yeah, that's interesting. Makes total sense. Like I did not know that you could
Yep.
structure it
Yep.
like that.
Yeah,
That's
and
something I've
it's
learned.
even
Very
better
interesting.
under the new with the tax bill that happened over the summer here in the United
Mhm.
States. It really they codified this much better and they made it permanent, which is good. So we know what the rules are, going forward, unless somebody dramatically changes the tax laws, which I don't foresee happening.
Yeah, quite interesting. Okay, so basically, just to recap a little bit,
Mm.
like you did start this company as a C corp and not as
Yep,
an LLC.
we did.
Okay, and you kept it as a C corp, and
Always
then
kept it.
you had
Yep.
this opportunity to actually also sell your
Yeah.
stocks at the end, exactly as you just explained.
Yeah.
Wow. So that probably, I mean, that was a six-figure gain for you to just structure it,
It
right?
was, yeah. I mean, it probably saved me 30% of it saved me 30% of
Yeah,
the amount of the sale in the long run. So yeah, it's
yeah,
nice. I mean, I only really pay tax on the loan interest that I receive, and that's
yep,
it out of it. And okay, that's okay. I set the loan interest here, and okay, I pay tax on it, but it's not near as much as it would have
yeah.
been.
I want to point out how huge this is. I
Yeah.
mean, that was a six-figure gain. Basically, it was set up in the beginning right.
Hmm.
One time, the right way. That's a small cost
Hmm.
relatively to what it will do
Yeah.
at the end.
Well,
But
and the
most
thing
people,
is,
they don't know
you have
about
to
that.
have, yeah, I mean, it costs the exact same amount in Texas where I live, costs the exact same amount to do any kind of allocate or, any setup of a business is it's the exact same amount regardless of the
Yep,
type. So
yep,
it didn't cost anything different. It was smart planning from the very beginning.
yep.
Um,
And that's what I'd like to point out if you don't know about that.
yeah.
But this opportunity exists. Like it's making a difference of a six-figure amount
Mhm.
potentially, have or have not.
Yeah.
So and therefore it makes sense to talk to somebody like you
Mm.
to figure it out from the
Yeah.
beginning. So and even if there's a cost attached to the consultation, right? Or
Yeah.
to, that's a very good
It's
investment.
yeah, I
Even
will say it's not nearly as much as the taxes would be at that point, so
yeah, and even, you never know how the company is turning out in the end. But if you're aspiring and you're all in with this thing and you make this happen or you do everything in your might to make that happen,
Mm,
even if you have a couple tries and one will happen, like that's still a no-brainer to
mm,
figure this out at the beginning and have that advantage. I
yeah,
mean, that would be a huge mistake not to do it. And
absolutely.
therefore, like, it's exciting to like I'm a fan in general. Like whoever I would be booking as a consultant or as an agency that I would bolt on temporarily or whatever for growth somewhere
Mm,
to work with people who have actually done the thing that they are selling to you.
yes,
So that's exactly what you are, right?
yeah,
So you are the
yeah,
embodiment of exactly that in the business, exiting niche, and you are somebody who is helping to structure the right way from day one, and you have that experience. It's a
mhm.
total different level compared to talking
Well,
to
and
somebody
and
who
and
also
I would
might have
yeah.
the know-how, but to having the guts to pull those things off
Yeah,
from
well,
day
and I
one.
mean, I will say it's just selling a business it's a unique challenge, I will say, and I mean, I've sold now 2 businesses, one, where I was intimately involved in the business, where I sold to a partner. That was one totally different situation. I sold to somebody else and that was a totally different situation. There's some similarities. One, it never goes as fast as you think. It always takes way longer because there's attorneys involved and they have their own timeline versus what your timeline is. Um, I will say, we're about ready to put up for sale another one of our businesses, and I'm like, I'm making sure I get everything in order. Which the more you're organized, the better off you're going to be because it doesn't. You need to spend a little bit of time putting everything together, putting together a kind of a packet of information that you'll provide to a potential buyer. Because what you don't want to do is you definitely don't want to have anything where they smell smoke, and wait a minute, and they get focused on that. So you don't want to give them any kind of a canary in the coal mine. You want to be as upfront as possible. You've got to give them all the information. Once, you've got to disclose all information. So it's best to have that very well organized. So as they have questions, they can get the information that they need. Otherwise, they're going to drive you crazy because they're constantly going to be asking you questions about things.
And rightfully so.
Absolutely. I would be doing the same.
Putting up smoke and mirrors about it, right? Then therefore it's their job. They need to do the due diligence. They want to make sure they are investing.
If I were buying a business, I would drive them crazy too. It would be
100%. So therefore, behind what you just said is like basically if somebody is, building a business and thinking about an exit in the future, like where the money is basically in structuring the business the right way so that it's worth a lot. For somebody who is doing due diligence that figures out, this thing makes sense.
Yeah, that it's an easy plug-in for their business. Like I said, once again, it's one of those the parts of a business sale where I've worked with clients and we've had that exit process that we've worked through. Phase one, you got to get the financials in order because that's the canary in the coal mine. If your financials are terrible, if you basically worked out of a shoebox, with receipts and everything else, you got to get your financials in order. So I would hire a good CPA that can go through those, do a kind of a minor audit of them, make sure they're in order. If you don't have a bookkeeper, hire a good bookkeeper that can actually get the books in order because most CPAs are not really good at fixing the books. But a good bookkeeper can get that stuff in order really well and get it working in the right way. Then have the CPA look at it and say, okay, well, this is how we need to tweak these, have those two work together to get the books right. And then once that's done, you've got to get all the information about your business into some format to where it's easily accessible. I typically upload it to like a Google Drive or a Dropbox or something like that. And, I'll have nice organized folders with, our contracts and, employee information as far as employee contracts, anything like that. Your leases, everything else, all in one spot so they can review all that as they're doing their due diligence.
Yeah. Perfect. And it's nothing complicated.
No.
What you've just
explained. No, it isn't. It takes time. And that's most people don't take the time. You also want to think about this a couple years ahead of time and not, okay, I'm tired. I don't want to do this anymore. I want to sell my business. Well, they'll smell blood in the water in a minute and, you're going to get yourself in trouble because you're either not going to sell the business or you're going to get much less price than you would have wanted when they start to smell the blood in the water.
Yeah, 100%. So a really great move also, I believe, that you have made, like basically the finance business, you have sold your shares to your partner. So, you had the customer for your shares in your company. It's awesome. You did not have to go out and find somebody else to buy them, which maybe even might have been super complicated because
it was complicated enough. Just, selling it to a partner was complicated enough. It just, there's so much time that it takes. It took me 7, 8 months from start to finish to close that deal in 2022. And I mean, that was a business that I knew, because we had to have a business valuation done, and then we had to negotiate everything out and fight back and forth a little bit between the lawyers. And, then it's just kind of figuring out how you're going to wind down the business and wind yourself out of the business at that point, because I was intimately involved in that. And now all of a sudden I wasn't. So
Yep.
we kind of had to back me out of the business to where I wasn't really interacting with the clients, and really had no interest in doing that because I'm not trying to grow the business. I'm not trying to grow his business at that point. I'm trying to exit out. And, I was kind of looking at, well, what's my next step going to be? And I think that's another big part of it is you got to start to figure out, well, what's your next step going to be? And, I had some things some projects that I really wanted to work on that it basically gave
Yep.
me 7 months of getting paid to work on my own projects at that point.
Mhm. So basically, what you're saying is like you had an agreement to stay in the business
Yep.
while it's been, to help hand it over and make sure that all the process, everything
Yep.
is running smoothly until you kind of faded yourself out. And
Yeah.
it's basically an insurance for now the new owner of the whole business that nothing is breaking.
Yeah. Well,
Compared
and,
to you're
and
saying
insurance.
goodbye and you fly to
Yeah.
the Bahamas, and then tomorrow he doesn't know where to find the password for
That's
something.
exactly right. Yeah, and so I
Yeah.
moved out of our office that we had in the co-working space here. I moved to a separate office. And I really, like I said, I started working on my own projects at that point. I still was working with a few clients that eventually came along with me to my new firm. But I had some writing projects I wanted to work on. I was launching a podcast at that time, and I was really trying to codify a lot of this whole Freedom Day concept, which it was interesting that I was kind of building it on the fly. So the book that I wrote that kind of lays all this out, it was funny because I wrote 12 other books before I finished the book that I started first.
Mhm.
And the reason was the story wasn't quite written yet.
Mhm.
And, it took me some time to really go back and then say, okay, well, here's how all this laid out. And it was a lot of introspection of how all this happened throughout a 10-year period of time of launching
Mhm.
businesses and building businesses and everything else. And I wrote the book Overcoming the Retirement Trap as a result of that, which is kind of the Freedom Day story, I guess, the best way to explain it.
Yeah, exciting. And I'd be curious about a couple more details. Like when
Yeah.
you said like it took around 8 months
Yeah.
to make that deal happen. So and then you were also mentioning, okay, there were lawyers involved, and there
Oh,
was. It sounded like some external person involved to evaluate the business.
yep.
Can you maybe give us an idea? That was a 7-figure exit, right?
Mhm.
So what is the cost also involved for evaluation for the lawyers and all of it? Basically, cost of exiting
Yeah.
the business.
Well, for me, my partner had to get the business valuation done because he was trying to buy the business. So he had to get the business, he was buying the business from me. We had to have that valuation. So he took that cost on. I don't even know what he paid, couple $1,000s, probably $3,000 to $4,000 to get a business valuation done. Lawyers, there were lawyers on both sides of the deal, which you really have to have because they're each representing either party's interest at that point, and they're the ones that do the negotiation. So, my partner and I really didn't have any interaction. I mean, here in the office, we'd see each other and say hi or whatever, but we had very little interaction. We didn't discuss the deal at all
Interesting.
outside of
Okay.
the attorneys, and I would encourage people to do that. You don't want to be having a conversation where the attorney's not involved because you could make an agreement that you didn't know that you made and put yourself in a bad situation. So everything went through my attorney and his attorney, and then they went back and forth. His attorney drew up the sale document, and then my attorney came in and just ripped it to shreds. And so I had a really good attorney. I mean, he's been a long term friend of mine. really sharp young lawyer, and just literally took a 45-year career attorney that's been doing these things and just literally shredded him in the process. And it was just, and it was a lot of back and forth on, well, what was the amount that I would take out in cash versus what I would finance and everything else. And, it was about I financed 70% of the deal versus 30%, which if I was advising a client, I would never advise them that much risk. I mean, that's a lot of risk to take on
Yeah.
yourself.
He fucks up the business 3 months later.
Yeah,
There's
you're
the money
screwed. Yeah, and
gone.
I mean, yes,
Yeah.
theoretically, I could step back in and take over the business, but I mean, if it's already screwed up, it's going to be a lot of work to fix. So I typically recommend the other way around. Maybe finance 40% of the deal and take 60% in cash at that point, where now it's like, okay, I'm at least taking some of the risk off the table at that point. If the business goes away, okay, I can probably step back in and try and fix it or sell it again, but it's not going to be, the big chunk of my income that's just getting wiped out as a result of that. And I've seen this happen multiple times with clients where I wasn't involved in that situation and the client basically lost everything as a result of
Wow.
it.
Oh my God. Yeah. Wow. Thank you for those insights. Also, it's quite enlightening.
Yeah.
So it's I would be super excited to dig into those other exits that you've done as
Yeah.
well. But maybe that's something for a future podcast, because like you have this one thing you're talking about, this idea, this concept of the Freedom Day,
Yep.
right? So, and you live the Freedom Day. You
Yeah.
have said beforehand, like your first Freedom Day, basically, that's the one that matters. That was the exit of this company, right?
Yeah.
So elaborate on that concept. Like, is the only way to have a Freedom Day to exit a company? Is there
Yeah.
different ways to do
No.
that? How do you
Yeah,
define the Freedom Day?
Not at all. I mean, you can have your Freedom Day and be an employee. What the key to it is people have got to get out of the mindset. And this is unfortunately, it's a result of, and this happens all over the world. Most of the financial firms in the world, how they make their money is gathering assets, and then they make money off those assets. So thus, the people that work for them, financial advisors and wealth managers, they typically are going to do what the people that pay them, what they're trained to do is acquire assets. So the entire retirement industry is built around, well, this number. And I remember when I remember this came out in the early 2000s, when I was working for a large financial firm, they came up with the number. And it was, well, you have to have X amount of dollars saved so that you can retire. And, what happens a lot of times is there's this magic number, but that magic number doesn't really necessarily mean anything because the number is not what you live on. Income is what you live on. The number doesn't really matter as much, but it's the income you generate. And so when somebody comes to me and says, well, hey, Jeff, I have $800,000. Can I retire? My first question is, well, how much income do you need? Where are your sources of income? Where's that money coming in from? Maybe 800,000 is enough. Maybe it isn't. We need to figure out where your income comes from first. So when I started talking about Freedom Day is not about assets. It's not an asset problem. It's an income problem. So when I talk to people about Freedom Day, they look at me and say, well, I'm going to retire at 65. Well, what does that number mean? That time period, it's not time bound, it's income bound. So when somebody says, well, when am I going to get my Freedom Day? Well, when are you going to have enough income to replace your existing income? And in a lot of cases, you don't need to replace your income. You need to have a certain bare amount of income coming in. So if you're spending every dime that you make, then yeah, you're probably going to need to make as much as you're making today. But if you're saving a significant chunk of your money, well, you don't need to save anymore once you get to your freedom day. You just need to have the income coming in that can help you live your life. And so that's when it becomes not a time-bound question. It becomes an income-bound question. So
Yeah. So replacing active income that you work for, you trade your time
I trade, and
for dollars.
some people say,
With
well,
passive
passive
income.
income. Well, passive income is maybe one way. Starting a business like I did, that was my first, what I would consider my first freedom day, was the ability for me to leave working for somebody else and begin to work for myself. Now, did I have financial freedom at that point? Oh no, not even close. But I had time freedom to where I could then go and build on my income. I had the ability to build multiple businesses at that time. Once I learned the technique to build a business, once I had a successful business, I just kept modeling the same thing over and over again. And I continue to do that today. I mean, I look at every single thing and I say, okay, I'm interested in generating another source of income. Okay, here's the model for how we're going to do this. And the model that I have today is, okay, it cannot involve me being intimately involved in the process at the beginning. It has to be built from day one to where it is highly, massively efficient, to where, either somebody else is running it for me, or in today's world, I'm leveraging AI like crazy in my businesses. I'll give you an example. My current wealth management practice, what used to take me close to a month to do research and build models and everything else and do the trading, is now done in less than about 4 hours time per month.
Wow.
And I can manage, I can basically develop the trading models using AI. So I have a universe of investments. I have a universal strategy, or technically 3 universal strategies that I built, that I can basically run through AI. It takes a ton of data and makes it very simple and comes up with a list of, here's our target list of investments for the month. I now, through the platform that I use for portfolio management, I can go in, update the models, then go in, take every single client account and say rebalance, boom, it does the rebalance. It takes me, 15 to 20 minutes to do that. And then I'm off and going for the rest of the month. So it allows me the time to take a lot of the weight off, and having another person to, let's say, do trading for me and things like that. I don't need it anymore. So it's being highly efficient and building a business specifically to where it's repeatable. I mean, somebody else could easily step in, utilize my strategies, utilize the trading. I could hire somebody to do that full time if I didn't want to be the one doing it.
Yep.
And that's every business I build now is that same way.
Yeah. Yeah. That's awesome. Love that
Yeah.
formula.
Yeah.
So, and I'd be curious, like your typical client, like what would be the questions that you hear
Mm.
the most? So give us the top 3 questions and also maybe your best answer.
Yeah. So,
Just
I
like
mean,
super
Todd,
quick. Bam, bam,
yeah.
bam.
How can I retire tomorrow is usually the one that they come to me, and it's like, well, we need to, we might be able to get you to your freedom day tomorrow, but we really need to have a plan. And that's really the answer, is you've got to have a plan. Stress in retirement is all about not really understanding what's going on, not really having a plan of how you're going to generate income, trying to generate all your income based on what the stock market's doing. And God knows I mean, today the market's up 900 points on the Dow. Last week it was down 500 points. Imagine trying to generate your income off of something that's moving that dramatically. So you've got to structure your income to where, okay, my essential expenses need to be covered by things that aren't highly volatile and are guaranteed and are going to last as long as I do. Because that's the number we don't know is, well, how long are you going to live? That's my joke to clients is when they say, well, how much, how long is my money going to last? Well, tell me how long you're going to last, and I can do that. I mean, the problem is we're working from an unknown. We don't know how long you're going to last. So we've got to do things. We've got to make sure we put things in place that ensure that you are going to be, income. If you live to be 110 or if you live to be 85, you're going to have guaranteed income coming in without a fail every month. Then you can have growth and you can have some flexible income and things like that. So, my other book that I work with clients on, I created called the Retirement Income Equation, and it's really laying those things out. So, it's a plan first. So we start from a plan. If they're a business owner, we'll sit down and say, okay, when is that exit going to happen for you? What is that exit likely to look at? So I'm going to ask them a ton of questions about, do you think there's a business out there that might be interested in acquiring you? Because a lot of times they've had people come to them and say,
Yep.
hey, do you want to sell your business? And they just weren't ready at the time. Is there a family member or a key employee that looks like they're going to buy the business from you? So we want to have a plan for structuring the business to make it efficient for whoever might take over the business. And you might have to call a little bit of an audible in there because you might think, I have a really good friend that we just helped her kind of sell her business. Her original plan was her daughters were going to take it over. And then as they started to make that adjustment and the daughters were starting to take it over, she realized that they were clueless on being able to run the business. They did not have the skill set to become that business owner, which meant that put her at risk because she was going to finance a majority of that deal. So she had to call an audible and then ended up selling her business to another company, which honestly worked out much, much, much better financially and just cleaner for her. She wasn't going to keep getting pulled back into the business, which is largely what would have happened had that had gone.
Mhm.
The question that I have for people, or the questions I get from people that I call cubicle warriors, those people that get up every day, go to work for somebody in a cubicle, that die a little bit every day. The question I get from them is, well, okay, do I have enough saved for retirement? Well, you may not, but I really don't want to work until 65. I'd really like to get out as soon as possible. Well, okay, you've got time now. You've got an income coming in to take care of your base needs. Either take some money out of that and put it towards not just savings, but put it towards things that will generate income. So maybe it's investing in a business. Maybe it is starting a business on the side that doesn't require a lot of money, but can start to generate a side income. Maybe it is I start doing some things like investing in real estate or looking at different paths along that kind of passive income side that will start to generate income. And once you have enough of that side income, it's what I call your minimum required income, MRI, which basically covers your essential expenses plus about 15% extra. Once you reach that, you're at your freedom day because you could literally leave your job that day and you would have no effect on your income. You wouldn't have to worry about your house and feeding yourself and everything else. You have enough. You have a minimum required income. Now, doesn't mean you're going to take all around the world trips on a cruise, but you can do something else at that point. Maybe it's a part-time job. Maybe it's, taking more time to actually spend more time generating income to where you can increase that amount at that point in time. So
Yep.
that, those are the three big questions or the
Oh, yeah.
three kind of clients that I get coming.
Yeah, appreciate it. Thank you for that. That makes a lot of sense. And then whoever was listening could sort
Yeah.
itself probably in one of those categories.
Mm.
So, and before I'm going to ask you the very last question for this episode that we're doing together, I'd be curious, like if somebody wants to get in touch with you, what would be the best way to do so?
Well, couple places. One, LinkedIn. I'm on LinkedIn all the time. That's probably the place you'll find me. I'm on all social channels, but that's the place you'll find me and you can contact me. Second, www.freedomdaymethod.com is the website I set up for kind of my Freedom Day, all the stuff related to Freedom Day. And that links you to my book. It links you to the podcast that I do, Freedom Nation with Jeff Kikel. It actually has some cherry-picked, the book has some cherry-picked episodes of the podcast that I do, videos of people that I highlight in the book. The website actually takes you to those very specific episodes. So you can, if you want to learn a little bit more about each of these people that kind of fits a chapter in the book, you can get that right off the Freedom Day Method website.
Awesome. Loving it. We're going to link this in the show notes as well. So for everybody,
perfect.
Super easy.
And there's lots of goodies on the website too. There's some freebies on there of like different, worksheets and things like that you can kind of work through the book and work through the worksheets on there.
Awesome. Jeff, last question. In one sentence, what do you think is the biggest mistake that you see people make over and over that are trying to actually get to the Freedom Day?
Failure to plan. Yeah, they have no plan. They just keep wandering through life. Whether you're working a job and you're trying to figure out how I'm going to get to my Freedom Day, they don't have a plan to get themselves there. And business owners especially, they're in the alligator pit fighting alligators all day long, and they don't take the time to sit down and say, okay, well, what does this eventual exit look like to me? And they don't really find somebody like me that is an exit strategy planner. I mean, there's not a ton of us out there to begin with, but it's finding somebody that can walk you through that process, specifically a consultant or a coach who actually has exited from a business is just a must, because, theory's fine, but I will tell you, having helped other people exit businesses and then done it on my own, it was a totally different experience. I gained such insight into the incredible stress and craziness that can happen as a result of that.
Jeff, thanks very much. Great to hear that we're here. Thanks for all of the insights, and probably see you soon. Jeff Kikel, thank you.
Thanks, Robert.
Go to rockandrollyourdreams.com/podcast.